So, Dan, when we're talking about NVIDIA in particular, the fact that this isn't a news story, but it seems like the crackdown on NVIDIA chips is intensifying. What does this mean for the stock and its revenues out of China?
Look, I mean, this is a shot across the bow, not just NVIDIA, but ultimately, U.S. tech. Look, and we've seen it, but you're talking about what could be 15, 20 billion per year for NVIDIA. Look, I think the bark ultimately could be worse than the bite here, but it speaks to the continued tensions we're going to see in China, and especially when it comes to NVIDIA. Look, that's the golden goose. They're continuing to go after the China market, and China big tech wants those NVIDIA chips over Huawei.
All right, Dan, we were just showing the broader chip sector, Chinese chips, and some other things just a short time ago. What does this mean for the broader chip sector? I'm thinking about AMD in particular that also has a significant China business. Does this signal just a broader pressure on chips?
Look, I think it just signals that you're going to have more and more tensions. And the reality is that when it comes to NVIDIA, when it comes to AMD, they want continued access to the China market. On the other hand, Beijing, they want domestic, right? In terms of Huawei, that's what they want, Baba and everyone to use. The reality is one chip in the world fueling the AI revolution. And that's NVIDIA.
Right. I know you've been a big bull on NVIDIA, along with our Jim Cramer. A lot of other people see the stock having considerably more upside. I want to talk to you about other U.S. tech players. Are any other U.S. tech players potentially impacted by some of these tensions, or maybe gamesmanship between the U.S. and China? Again, China cracking down on the import of NVIDIA chips, actually ramping up their customs enforcement and deterring Chinese companies from buying the chips. Any other companies out there, whether they be server companies, hardware companies of any kind?
Yeah, TSMC clearly, and then you look across, broader, when you think about chips, what could be the impact for names like Broadcom and others? Look, Frank, I think right now, this is all a game of high stakes poker, but the reality is that those big tech companies in China, they want those NVIDIA chips, and they're going to get them one way or another. That's why you see much more enforcement, and this is not going to calm down because it's an arms race going on between U.S. and China.
Well, Dan, it's really great to have you here. As I was speaking, and you were just talking right now, something else just crossed the wire. China is accusing Qualcomm of violating its antitrust laws, or at least accusing them of. I don't know if the full investigation happened. Again, just crossing the wires just now. What could this potentially mean for Qualcomm?
Yeah, look, I mean, this is just more of the same, because what they're basically looking at is, where are their weak spots? Okay, when it comes to chips, is it NVIDIA? Is it Qualcomm? Is it AMD? And Beijing's going to do what they can to try to ultimately, put those barriers up. I think for Qualcomm, the impact's probably going to be pretty minimal as this all plays out. But you got to see, because it's going to get a lot hotter in the kitchen, as you start to see this play out, especially the trillions that's going to be spent in the AI revolution.
Focus is on NVIDIA stock after analyst C.J. Muse of Cantor Fitzgerald reiterated the company as his first choice in the AI hardware market and raised the stock's price objective from 240 to 300, a street high. More than 55% upside from current levels is implied by the revised goal. NVIDIA is still in the early phases of what he called a multi-trillion-dollar global build-out of AI infrastructure, according to Muse, who has an overweight rating on the company. According to him, the company will continue to hold a 75% market share in the AI accelerator space, and grow this anticipated to continue for the next 10 years. Cantor also emphasized NVIDIA's collaboration with OpenAI to assist in the construction of self-hosted hyperscale data centers, a move that is thought to strengthen NVIDIA's position as a market leader by lowering dependency on outside server and cloud providers. As global AI spending rises to as much as $4 trillion, Muse predicts that NVIDIA's earnings per share could reach $8 in 2026's and $11 in 2027, much beyond Wall Street's expectation, with a potential path approaching $50 by 2030. Can I purchase NVIDIA stock? The average target price for NVIDIA is $215.19, with a high estimate of $389.73 and a low estimate of $100, based on the one-year price targets provided by 54 analysts. From the current price of $192.57, the average goal suggests an upside of plus 11.75%. According to estimations, NVIDIA's value in a year is $321.25, which is a plus 66.82% increase from the current price of $192.57, which is the fair value at which the stock ought to be traded. It is determined by taking into account past business growth, the stock's historical multiples, and projections of the company's performance going forward. Investors have profited greatly from Nvidia's hegemony in the artificial intelligence AI chip industry. The sector still has a lot of room to develop according to analysts. However, the stock's upside may be constrained by its high valuation. Nvidia's stock has increased by about 28,350% in the last 10 years. It's difficult to imagine such a remarkable recovery. 10 years ago, you would have become a multimillionaire if you had invested $10,000 in this stock. Today, the amount of money would be equivalent to about $285 million. With a market valuation of $4.5 trillion, it is currently by far the most valuable firm in the world. Apple and Microsoft, the next biggest stocks, are each valued at almost $3.8 trillion. Would this company, which has already increased in value significantly, still be a possible 10-bagger investment if you added it to your portfolio today, considering Nvidia's supremacy in the computer industry, the significance of its chips in artificial intelligence, AI, and its potential for future growth? Why Nvidia's worth might yet increase tenfold? You would have to think that Nvidia might eventually attain a market valuation of over $45 trillion if you wanted it to produce 10x returns from its current value. That's a massive price, but it might be realistic for the most successful tech companies to be worth that much in 20 years or more. After 20 years, Nvidia would have increased to over 10 times its current value if it were to expand by an average of just over 12% annually. Given how much potential there is for AI to transform almost every industry, it may not seem all that crazy to anticipate that the top AI chip maker may become so valuable in the long run. Grand view. Research analysts predict that the global market for AI chips will increase significantly over the next 10 years at a compound annual growth rate of roughly 28.9%. Nvidia and other AI firms may still have a lot of room to develop in the future, even if that growth slows in the years that follow. Even if Nvidia has the potential to be a 10-bagger investment, the future is not certain to be easy. There are dangers to take into account. The most obvious is that equities might be in a bubble at the moment and a crash could be imminent. Although Nvidia is a very profitable company with exceptional margins, its stock is currently trading at more than 50 times its trailing earnings. The company has a lot of growth already factored into its value at such a high price, which may limit future profits. The possibility of a reduction in AI expenditures should also be taken into account, especially if a recession is imminent. In the meantime, 95% of companies aren't seeing any return on their generative AI efforts, according to a recent Massachusetts Institute of Technology research. Even though AI chatbots can be useful helpers and increase user productivity, this may not be nearly sufficient to justify businesses investing heavily in creating their own AI models or purchasing AI-powered goods and services. Growth investors' willingness to pay for Nvidia's stock in the future may be greatly impacted if the company's growth continues to decelerate and a more severe decline is anticipated. Is it too late to buy Nvidia stock? Even though Nvidia is a leading AI stock, I don't think it will continue to increase tenfold from its current position. Given how highly valued the company is now, a lot would need to go right for it. Even while it is a top chipmaker now, that might not be the case in 20 years. Both technology and the need for AI chips may undergo significant change. Nevertheless, even if it doesn't produce 10-bagger returns, it may still turn out to be a wise long-term investment. Nvidia may be a wise tech investment to purchase and hold for many years to come if its foundations are sound. However, given its high price, it's crucial to keep your expectations in check. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Jensen, you're not only looking at technological advances and thinking about how to do that, how to build this infrastructure, you have to be thinking about risks all the time, too.
Yeah.
What's at the top of your list in terms of risk assessments when you're looking at these things that pose a risk, pose a threat to the growth that you're talking about?
Well, there's a lot of technology risk, and there's a lot of, product design risk. There's a lot of those kind of things. But those kind of things are things we're good at.
Yeah.
Fundamentally, our company is good at building technology and building products, and so we're good at those things, and we're continue to be careful and thoughtful about doing those things. The things that are hard for us, that are new for us, are geopolitical risk.
Yeah.
And it's out of our control. And the best thing that we could do is just inform policymakers and governments about the nature of AI, why it's different than previous technologies, to be accessible to them, to be informative to them, and then help them shape policies that are in the best interest of the world, the best interest of the countries.
So how far ahead of China do you think we are in terms of AI development at this point? How close?
Depending on which layer of the stack, but overall, I would say we're not far ahead. If you look at the entire stack, they're way ahead on energy. I am so happy that President Trump leaned into pro-growth, pro-energy growth, so that an entire industry above it could grow. If you could just imagine, without President Trump's pro-energy policy, that entire layer above the energy would have been constrained. China's well ahead of us on energy. We are way ahead on chips. They're right there on infrastructure. They're right there on AI models. Our models are better overall. OpenAI's is better, Anthropic's is better, Gemini's better. However, their open source models are well ahead of us. And then on the application layer, we have to be quite mindful because their applications are very fast moving. Their society is very quick in adopting new technology. They're under-regulated they don't regulate heavily at the industrial level. And so the applications in China are advancing incredibly fast. This is an area that I'm quite concerned about. I hope that American companies and American society are going to be fast in adopting AI applications, because ultimately this industrial revolution wins at the AI application layer, at the diffusion layer.
There was an analyst just this week who said that he's anticipating China will get NVIDIA's Blackwell chips by as early as next year. Do you think that's the case? If we are way ahead of them in chips, what should our strategy be? To give them better chips, or risk having them build their own chips that are better? But if we hold the advantage here, how do we, as Americans, think about this?
That's right. This is where a nuanced strategy is necessary. And we have to take a step back. President Trump had a AI Action Plan Day. And that AI Action Plan Day, he was very clear, and is a very thoughtful and very America win around the world strategy. Ultimately, he wants America to win the AI race. So the question, when you take a step back and ask yourself, what does that mean? At the chip level, you want to have the most advanced chips. We want to make sure that the United States and American allies have the most advanced access to the most advanced AI chips. On the other hand, in order to win the AI race, you need to have all of the world's AI developers to be building on your platform. Just as we would, if you're an app store, you would like all of the apps to run on your app store. If you're an operating system, you would like all the world's applications to run on your operating system. If you were a chip, an American tech stack, you want all of the world's AI developers to developing on your American tech stack. That's true whether we're here in the United States or whether it's developers in China. So this
from a defense
nuance,
perspective, we don't want them having the chips that are as great as we are, because we don't want them having access to that, particularly when it comes to the military.
No government, surely Chinese government, is going to be building their defense on Western technology. Nor does the Pentagon use Chinese chips to build our national security. And so they have plenty of chips themselves. Don't forget that this is a country not without any chips. They have Huawei. They have really, really sophisticated and really entrepreneurial startups building AI chips. They're manufacturing lots of chips. And so the fact of the matter is their military has plenty of access to their own chips. What we need to do is find a nuanced strategy that allows the United States to stay ahead, but for American tech stacks to be used all over the world so that the world builds on the American standard.
Are we on the way to being that global standard? I mean, you keep hearing about sovereign AI, and it seems as if there are these interests in creating parallel kind of AI ecosystems.
If we don't win around the world, someone else, if we preclude other people from building on the American tech stack, they'll have to use some other stack. I think David Sachs had a really simple KPI. He said, in 5 years' time, if the American tech stack is 80% of the world, then we are doing a good job winning the AI race. If the United States is 20% of the world, then we've lost the AI race. Now, one of the things that's really important is that developers are all over the world. 50% of the world's AI researchers are in China. China is 30% of the technology industry, technology market. The Chinese market is large. They've got 1 billion users. And so it's not a market that you could easily decide to walk away from if your ultimate goal is for America to win the AI race. Giving up 30% of the world's market right from the get-go, and then not allowing American technologies to diffuse and be proliferated around the world, we are essentially isolating American technology into America and forfeiting and conceding the rest of the world to everybody else. And I think President Trump would say that that would be not a condition for America to win the AI race. And so we have to find a nuanced strategy that allows America to have the best technology, earliest technology, but also to win AI developers around the world and win AI markets around the world.
Well, you have to separate it into pieces. So if you're asking, what do I think about the stocks of the AI companies? I think they're going to go up a lot for one simple reason. The Fed's cutting rates after being on hold for 9 months. You're going to get another probably 3 cuts between now and January. And then you're probably going to get Stephen Myron being the new head of the Federal Reserve in May, and he wants rates about 1.5% lower than everybody else. So in an environment of easy money, you're going to be able to fund a lot of cash burning businesses and have everybody be treated like everyone's going to win. So from a stock perspective, that's how I'm thinking about it. Now, if you want to look out several years from now, or maybe at the end of 2026 when rate cuts are done, and you go, all right, are people going to get more discerning about these circular investments? And are you going to figure out, well, which AI companies are actually going to win versus the ones that are going to be sort of left behind? Then I think you're going to start to see some problems. But in the near term, I think these stocks go up for one simple reason. Easy money funds a lot of cash burning AI businesses.
I just got to take a little divergence here because you just mentioned Steve Myron as the possible next Fed chair. Why do you think that? I think just today he batted down rumors that he was even considering it or in conversations about it.
Well, I mean, let me put it this way. There's a reason he's out. If you look at the Fed dot plots, he wanted 125 more basis points of cuts between now and the end of the year. So that would mean 1 cut of 75, 1 cut of 50. President Trump, as we all know, gets to appoint the new Fed chair. And as last I saw, Myron was still part of the White House administration while he's on the Fed at the same time, which has not happened in a very long time, right? Usually you resign your prior post. So we'll see how this works out. But I think it's pretty clear that the Fed, much like in 2021, where I thought they should have been raising rates, they convinced themselves inflation was transitory. They kept rates on hold, and the S&P finished the year up 27%.